Hi everyone, and welcome back to episode 3 of Technical Analysis Basics. We're going to talk about Fibonacci patterns. So what is Fibonacci? I'm sure this pattern looks familiar to you. So this is a ratio between 3 points, the beginning of a move, the conclusion of a move, and the conclusion of a pullback. So this is used for forecasting downturns as well as spotting reversal zones on a chart. So in the example on this slide with ETH, we can see that we've reached a sell zone and we can identify on the 4-hour time scale the buy zone, the pullback zone, and where we think the price could be headed. So the difference between retracement versus extension is very basic. It's either predicting downturns and bottoms, this is retracement, or forecasting tops and reversals, and that is an extension. Basically, it depends on which direction you're trading the market. So we'll continue with this example with Ethereum, where the red zone is a sell, green zone is buy, and then everything below green is sell or potential bounce back zone, okay? And you can even see this green arrow here at the bottom of the chart where that is potentially something called a double bottom. And we'll talk about that in a future episode. So this was the crash course in Fibonacci. You can watch that again. You can also see the links to the trading ideas below and go to my trading view to see these and study these examples in more detail. Now stay tuned for the next episode and follow me on Twitter at lydiascherr.eth. Like this video if you stuck till the end. You should have, it was like 2 minutes. And please subscribe to this channel. We have more courses, exciting news, and content coming up every single week. Take care.